Good evening everybody, welcome to Officers Adda 247. Today in the target series we will be talking about the IFS subject, and in the IFS subject we will be starting off with the core of your module D, that is unit number 30th. And unit number 29th, if you have not seen the entire video, I would highly recommend you to go and visit on this particular channel only. You will find the elaborate discussion of unit number 29th, because why I am saying this, module D is the most important one for IFS, and if you miss even 1 or 2 units here, then whatever the future units we will be covering, you won't be able to relate to it. So start from the basics till the end. Module D is the most important module of your entire IFS. So when I talk about today's class, unit number 30th talks about the money market, and in money market what all components are there. Before jumping into those components, let's see what do we mean by a financial market, because ultimately money market is just a part of the financial market. Overall, when I talk about the financial instruments in a country, they are from the banking industry, from the pension services, from your insurance companies, as well as something from the security markets as well. And specifically for our discussion, whatever we will be discussing today, it is focused somewhere on the derivatives, somewhere on the equities, the share, the pricing, and the financial market. For our chapter we will be including all these important you can say derivatives or the other products. So financial market, the bookish language when we talk about, it is a broad term referring to any center or arrangement where buyers and sellers participate in the trade of financial claims such as equities, bonds, currencies, as well as derivatives. So currencies, yes, but mostly in this entire module you will find equities, bonds, as well as derivatives, their buying, that is their purchasing, as well as their selling will be going on or will be talked about. So when I talk about the two types of financial market, they are capital market and the money market. This particular category, that is the money market, that forms our unit number 30th. And what is the major distinction between these two markets? They are having one common difference, which is the duration. The short term we call money market, long term we have the capital market. So market for trading short term financial assets with the maturity of up to 1 year and deals with highly liquid market is known as the money market. It caters to the small to the short term borrowing needs of the working capital. If you want quick funds for sustaining your business, then definitely money market is one of the best alternate available to you. Because of the short maturity period, it offers highly liquid security, so liquidity of securities will be high. Hence money market investments are also known as the cash investment. Always remember this, question can be asked from here also, that what do we mean by cash instruments. Very simple questions are also asked in IFS, so do make sure that you read the definition in and out. Money market definition, if we talk about what are the market investments, money market investments, they are having another term. Why? Because they are liquid enough, and the term is cash investments. Next, capital market, the market for borrowings and lending of medium as well as long term funds above 1 year duration. The duration will be more than 1 year. That is the major difference between money market and the capital market. And when I talk about the money market, all those components which are included in the money market, they are very important for our exam, be it the treasury bills, be it the CDs, the certificate of deposit, or the commercial papers. For that matter, what do we mean by call money market, what is a notice money market, and the term money market, how we distinguish them. Let's see. So money market you have majorly categorized into 3 forms. First one being the call market, call money market, with the duration of 1 day only. The transactions are happening within 1 day. Notice money market for 1 to 14 days. That is the minimum time duration, 1 to 14. For the term money, what is the maximum limit? It will be what? Less than 1 year, because we are talking about money market, but the minimum is 14 days, fine. Beyond 14 days till you can say 1 year, the term money market is there. So, the categorization you must remember. But when we talk about the most important point from this entire money market, you will find the prudential norms as the most important one. Why? Because one table is there in the book also, the Macmillan publication book, and IIBF has this habit of asking questions from the tables. So, we will be looking into that as well. So, when I talk about the participants in the market, you will have the participants as being suggested by the RBI, as has been finalized by the Reserve Bank of India. So, this market is supervised by the Reserve Bank of India, which issue guidelines for various participants in the call or notice money market, as well as for the term money market also. So, participants in call or notice money market, which are for less than or equal to 14 days only. Currently, they include banks, scheduled commercial banks, primary dealers, DFIs, that is development finance institutions, insurance companies, and some mutual funds. What are the, you can say, specific names of these mutual funds? It is none of our concern right now. Of these, banks as well as the primary dealers, they can operate both as the borrower as well as lender in these markets. So, always remember, your PDs and banks will be having the function of borrowers as well as the lenders. But when I talk about the non-bank institutions, what about them? The non-bank institutions which have been given specific permission to operate in call or notice money market can, however, operate as only lenders, fine. So, a particular distinction has been made here based on the category of the participants. If you are falling under the banks and primary dealers, you can act as a borrower as well as lender, but for the non-bank institutions, you can only act as a lender, fine. And we have seen that IIBF has this habit of asking questions from such distinctions. So, mark this very, very important. Direct question can be asked. Now, let us move on to the major topic, that is the prudential lending limits. So, when we talk about the prudential norms of RBI, they are not there since the independence. They were not there since the independence. Majorly, the shift happened after the Asian financial crisis of 1995, and right now we see updation on regular basis for these prudential norms. And these prudential norms not only takes care for the general business activities, for the regular business activities of a branch of a bank, but also for the money markets. So, when I talk about the prudential limits, what are they for the call money market, notice money market, term money market? Along with that, we must also know what is the benchmark for various participants. The benchmark is very important. If you know, if you remember the benchmark, then things will become very easy and you will not get confused between the options while sitting in the examination. So, prudential lending limits, prudential limits in respect of outstanding lending transaction in call, notice, term, money market shall be decided by the participants with the approval of their board. So, RBI will be laying the foundation of the prudential norms, but different participants, as we have seen, they will be having a particular board of directors. They will formulate a policy for that particular financial institution. Whatever is written in that board's policy will be implemented by the participants within the regulatory framework, the exposure norms prescribed by the Department of Regulation, DOR of RBI, fine. It is Department of Regulation, do remember, not the Department of Supervision, fine. So IIBF can ask this question also, and students might get confused, but if you are attending the session, you will be knowing that it is DOR. Fine, Department of Regulation. Now let's see the prudential limits. One by one, we have 4 participant categories. First of all, the scheduled commercial banks, then we will be talking about the payment bank and RRBs. After that, cooperative banks and the primary dealers. So when I talk about the first category, scheduled commercial banks, it includes the SFBs as well, small finance banks. So what about the prudential limits here? Let's have a look. Always remember the prudential limits prescribed by the RBI for the scheduled commercial banks, it has been categorized into 2 types. The first one for the call money market and the notice money market. The second one for the term money market. So for call and notice market, you will have 100% of the capital funds on daily basis, on daily average basis in reporting fortnight. Fine, whatever fortnight you are reporting in, the fortnight refers to what? Within 15 days, and these call and notice money clubbed together, the maximum limit is 14 days only. So what is the benchmark? Benchmark is the capital funds. Based on that, a particular limit has been assigned 100% of capital funds. The next limit is 125% of the capital funds on any given day. So if you are calculating the prudential limit for a particular day, that is supposedly today is what, Thursday. For Thursday, how you will be calculating? 125% of the capital funds, whatever funds your scheduled commercial bank is holding, the capital funds, you will do what? The mathematics, 1.25 times of that particular fund, and you will have the prudential limit. Fine. For the fortnight, if you are managing the entire fortnight, you have the data, then 100% of the capital funds on daily average basis. Fine. So do remember these 2 things, they are very important for the examination, and direct questions can be asked. When I talk about the term money, here things will get interesting. Why I am saying this? The internal board approved limit within the prudential limits for interbank liabilities, whatever interbank liabilities are there, which are being defined by your bank, the prudential norms which are being set by the RBI, and the final board policy, whatever it says for those prudential norms, it will govern the term money market for the scheduled commercial banks as well as the small finance banks. Right? So term money and call notice money, they are different. Do remember the limits will be determined by different benchmarks. Capital funds here in the call and notice, and the board policy for the term money. Then we have second category as payment bank and RRBs. Here for the 3, call, notice and term, only single prudential limit has been mentioned, and the particular benchmark is capital funds. Fine. If you are calculating based on the daily average for the reporting fortnight, then 100%. If you are calculating using a particular day's capital funds, then 125% of that particular capital fund, whatever you are holding for Thursday, supposing today is Thursday. Cooperative banks, so call, notice and term money, here you won't be having the capital funds. Fine. Like in the first 2 categories, capital funds served as the benchmark for the calculation. For cooperative banks, it is not the benchmark. Then what is the benchmark? It will be the ADs, the aggregate deposits. So aggregate deposits, you must know for a particular cooperative bank, as at the end of the previous financial year, whatever financial year has ended. And what is the limit up to which this benchmark will be calculated? 2% of this benchmark. What is the benchmark? It is the aggregate deposits pertaining to the previous financial year. Fine. Last category is the primary dealers. Now in the primary dealers, you will again find 2 sub categorization, one for the call and notice money market and the another one for the term money markets. Here again the benchmark will change, and for primary dealers, do remember the benchmark is net owned funds, okay, NOF. Fine. So for call and notice money, 225% of the NOF as at the end of the previous financial year on daily average basis, if you are calculating for a fortnight. So 225% for fortnightly basis and 2 to 5% of net owned fund as at the end of the financial year, the previous financial year. Fine. So the benchmark will remain the same, as well as the limit will also remain the same. Whether you are calculating on the daily average basis in the reporting fortnight, or for that matter for the end of the financial year, both will have 225% of the net owned fund as the answer for primary dealers. Okay. If you do not have the access of this particular chart, this particular table, I would highly recommend that just take a screenshot out of this particular video and save it somewhere, because one question is expected for sure from here. Okay. Just take a screenshot. I will minimize everything. Fine. Now, when we talk about this trade which is happening in the money market, how it is conducted, who is conducting it? Obviously RBI, Department of Regulation. But how exactly the mode of operation is working here? Let's see. The trades are conducted on NDS call system, and this system is an electronic system, an electronic screen based system set up by RBI for negotiating the money market deals between entities permitted to operate in the money market. All those participants which we have seen in the previous slide, they can conduct their trade using the NDS call system. So always remember, NDS call system is there for you to promote the trade activities in the money market. Fine. So that is the platform. But how the money market will deal with the money, with the security, with the equity, with the derivatives? The settlement of the money market is by electronic fund transfer, again using the real time gross settlement system, that is the RTGS, fine, again operated by the RBI. Now the repayment of borrowed fund also takes place through the RTGS system on the due date of repayment. Always remember, the RTGS system is there not only for the settlement of the money market deals, but also the repayment of the borrowed funds. If you want to repay the amount which is there in the borrowed funds, you will be having the option to settle that particular due on the due date of repayment via the RTGS. Fine. So NDS call system, RBI, RTGS for the general operation under the settlement mechanism of money market, as well as for the repayment of the borrowed funds. Apart from the call, notice and term money market, we have treasury bills, which are very important for our examination. Time and again you will find reference in unit number I think 17th, yes, in unit number 17th also T-bills have been discussed shortly, very briefly, thanks to the EBLR, the external benchmark lending rate. Then we have commercial papers and CDs, certificate of deposits. The difference between these two, it is very important. One question is expected from here as well, and students are often confused between these two. Call notice money we have discussed. Interbank term market, although an important mechanism, but directly not that important for our exam. Repo agreements, very important, highly important I would say. We have discussed briefly in the unit 17th also. Bankers acceptance, again it is the another mechanism for the money markets, but in the examination questions are not asked from here. Mostly T-bill, commercial paper and certificate of deposits. And if you want to complete the entire gamut of money market, all these products with us, I would highly recommend you the batches which are ongoing right now. You will have simplified form, like here you can see the CPs and CDs, they have been simplified for you via a particular chart, via a particular table. The specific aspects which are time and again been asked by the IIBF, they have been enlisted, and difference has been provided to you for easy learning, for very you can say easy grasp of the concepts, for quick learning, easy learning plus quick revision as well. Fine. So where you can go, you can visit our website for the entire chapter, or for that matter entire subject, or the entire JAIIB course. Fine. We have basically the most important or the most comprehensive course out there in the form of JAIIB Mahapack 2.0. Why I am saying this? Because it not only includes the regular batches, fine. In the regular batches you will find daily live class, from scratch subjects will be taught to you. Then you will be having the recorded videos of those classes, the PDF from which we are teaching you there, they will also be uploaded on your portal. Then mock test will be there, plus you will also have the access to the doubt session. After the class we tend to ask mostly most of the times that if any doubt is there, you are very welcome to ask such doubts. All these things are available. But when I talk about the crash course which will be launched in fact just before 1 month of the examination, along with that the revision batch which will be launched just 10 days before the exam, for the final push, for the final marathon I would say, which we have to run to qualify this exam. All these will be covered under the JAIIB Mahapack 2.0. So in all, if you are not enrolling in any other course and just buying this Mahapack 2.0, everything you will be having, not only these batches but the mock test unit wise as well as full length mocks. Okay. So from where you can access these batches, from where you can purchase these batches, just go to our website, that is ADDA247. Click here on all courses, JAIIB CAIIB, JAIIB November 2025. View all, and specifically for all your needs we have separate offerings. You want subscription of individual subjects, we have it. If you want to go for individual batches, the regular batches only, we are having it for the English medium as well as bilingual medium. And if you are interested for the latest batches also, they are again available on the website. And this is the JAIIB Mahapack 2.0, where you can enroll directly by clicking on buy now. Personal details, you have to fill the phone number, the email ID as well as your name. Along with that, one coupon code you have to apply for maximum discounts, which is Y1003. This is the coupon code which you can apply and avail this maximum discount. Now when we talk about the discounts, these discounts are valid for today only. Okay, only today. That's it. From tomorrow you will be having a price hike, price rise will be there on all the courses, be it JAIIB, CAIIB, fine, the Mahapack, the individual batches, the test series. So avail this offer as soon as possible and use the coupon code Y1003, because you know from tomorrow the JAIIB registration is also commencing. Fine. So make your decision as soon as possible. And for further queries, you can mention the respective query in the comment section, or you can directly contact our team on this number 981-981-9247. Okay, this is the number where you can contact our team directly. Okay, the coupon code for maximum discount valid till midnight is this. Fine. If you have any doubt, just feel free to ask us in the comment section. We'll meet in the next session. Till then, goodbye everybody. Take care.